Welcome back to Golden Rule Radio. Oh, yeah, it's been one of those days with the Federal Reserve not raising interest rates. A big yawn. And the markets did a big yawn as well, especially the gold market trading flat and the silver market.
Well, initially, I think gold priced in an expected move because it did drop about $10 in the morning. And I was getting a little nervous with flirting with that 12.12 support level again that Miles has been preaching about. But it didn't happen, and it did. It came back up, and all said and done, not a whole lot of change.
Yeah, but I think there are a couple things we got to focus on gold-wise. I was talking to Drew, our company coin buyer here, who's also been a bit of a chartist himself for, well, longer than I've been alive. And Drew and I were looking at a few things on the chart after our meeting on Tuesday. There's some fascinating things, not just with the trend lines and RSI divergence that I've talked about, but also with the moving averages. You know, Drew's a long-term investor. You know, he looks at the 200-day, the 40-week moving average. He looks at the 325-day, the 65-week moving average, and it really does help paint a broader picture. So obviously, you're looking for those longer-term moving averages to change direction. That gives you a better understanding of how trends moving, but that doesn't mean you can't break below them when they're going up, and it doesn't mean you can't go above them when they're going down. So he and I kind of tracked out the last year and a half on how gold is priced based on those moving averages. And if you actually go back exactly 65 weeks from this week, we had a break below the moving average similar to this, lasted about 5 weeks, and then we had a reversal and a push up that lasted about 9 weeks. So we went looking for that pattern back throughout the last couple years, and we do see kind of a repeating pattern in how the moving averages correlate to the price and how quickly it takes price to reverse after breaking that. So after about 5 weeks below the moving average this go around, coming into what Robert's been talking about for months, the seasonal pricing in gold, what I've been talking about for months, Fibonacci levels, trend levels, so on and so forth. Here's just one more thing to add to the pile to say, if we have a turnaround after this 5-week downside, we should see gold resume pricing back up to the moving average at about 1285, which is also a number we've talked about, and then pushing up to retest the old ties 1360 within about 9 weeks. Lo and behold, that brings us to November, which we historically show highs before we have the December sell-off. So timing, while I don't like to talk about timing in metals pricing, or really in any market, because you just don't really know, it's real hard to say, oh, this happens this time of year, so on and so forth. There is something to be said for that when you stretch that time frame out far enough.
Yeah, I really like that, Miles. I think that could be what we watch play out, but time will tell. I think patience pays, and we'll see that. I want to say in relation to us charting just the gold price, look at the platinum gold ratio, and the gold price alone, when I look at the platinum gold relationship, doesn't really matter to me a lot because I'm looking at increasing the total ounces using those ratios. So we've emphasized this before, but the ratios are what matters so that we can increase total ounces of a portfolio. If you have questions about that, you can feel free to call us. Moving on to silver, how does silver relate with the gold action we've seen?
You know, not a whole lot has changed. If you're keeping an eye on, again, value, if you're keeping an eye on the ratio, I'd say it's not real fun to watch prices come down, and silver's been no exception. But the fact of the matter is I kind of feel like a broken record. I don't know if you guys do. Every summer, I'm sitting there telling clients, if you're going to add to your ounces here, do so before the end of August. And I feel more strongly about that this year than I have in the previous years. So if you're looking to roll over an IRA or just to pick up a few more ounces, I really do feel strongly, whether it's in silver, whether it's in gold or platinum, you do so by the end of August. And again, watching those ratios, we lean towards the white metals right now.
Speaking of white metals, we'll jump to platinum, which is at a 10-year low, or at least close enough to it. What do you want to say about platinum, Miles?
Yeah, platinum moving into those low pricing compared to what 2008 bottoms. Obviously, we're below that channel that we were in for quite a while. So I'd argue you need platinum really to move back up to that 882 floor. So platinum is below the floor. Palladium's pretty similar. It did move below those trading levels. It actually came into that first resistance. While everything else was kind of moving down last week, Palladium actually had about an 8 or 9% jump up, but it came into that first resistance, turned back down. So Palladium has a bunch of pricing above here where you should see standing limit orders waiting to push that price back down. There's a lot of action between here and the previous high. So I think that's where it comes down to. This is a monetary issue, a precious metal issue that we're looking at, a Federal Reserve issue, a US dollar value issue. This isn't just about commodity pricing going up, but this is about a lack of faith in the direction of the US dollar long term.
Yeah, we're going to get into currencies later in the show. I think that's exactly right. And all you have to do is look at copper over the last 2 years compared to the precious metals action. And that'll tell you a lot about the difference between a precious metal and an industrial commodity or industrial metal.
I think we have to bring up oil too, talking about the commodities. We had the biggest drop in months over the past few weeks, down about 8% since peak. And that's despite the interruptions coming out of Iran due to OPEC and U.S. production. So a lot of these commodities are faltering. Robert and I talked about soybeans and corn and a couple other things last week that have also had big sell-offs. So it's not unsurprising to see all of these commodities, industrial metals, and even to some extent the precious metals pushing down short term. The question, of course, is when it turns around, what does best? And I think that's where we bring in the ratio discussion.
As we started the show, the Fed did not raise interest rates today, and I'm not sure if that's a sign of them following Trump's frustration with them raising interest rates or not, but definitely hard to subtract the political out of the policy decisions that we've seen. Tori, how many rate hikes do you think we're going to see in the next few months?
I still hold to 2, and now it's got to be the September meeting and the December meeting. I think December is almost a guaranteed. That's gotten to become an annual trend. And then it's also the quietest time for the markets, least amount of impact, if you will. But I think it's shaping up more like September. The federal government can get through its fourth quarter, and that FOMC meeting is right there, September 25th, 26th. Very little impact on those fourth quarter numbers coming in.
Well, why do interest rates matter? It's because it costs more to borrow money. And I think I saw the other day, I read somewhere that about 20% of all the companies in the Russell 2000 index, about 20% of them have to borrow money just to pay the interest on their existing debt.
I'll tell you the other thing that it does is it reduces investing in some instances, right? I mean, if you're going to get any sort of return and you're not getting any through a conservative CD or low yield approach, well, then, you're going to be investing in stocks. You're going to be looking for some sort of return somewhere else. So I do expect there to be some, as Trump puts it, some downward pressure on the economy with raising rates, just from the standpoint of people now putting money into the bank, having a more conservative savings approach, less of an investment mindset. Before we leave the currencies, I want to, Miles, you mentioned the fact that the precious metals are a hedge against currencies. Don't forget to really watch global currencies. Just because gold is down in the US dollar does not mean it's down around the world. If you're in Venezuela right now, here's our monthly update on the Venezuelan inflation rate, 40,000% it hit. We've mentioned that, but the IMF came out and they have zero confidence in Venezuela's currency, and they're expecting it to hit a 1,000,000% inflation rate by the end of the year. And that's basically a failing currency. And this is 2018. And then you've got the Iranian rial that's looking like it's doing the same thing. Since April, it has doubled in terms of the number of rials it takes to buy the U.S. dollar, and that's gone from 70,000 to 144,000 just since April. And the official reported rate is 44,000. And I'm telling you, that's something that all eyes should be on, because this is now becoming a trend.
Well, and let's also not forget the Bank of Japan, Kuroda still holding interest rates below 1%. So there's our bond discussion and interest rate discussion again, and how that value from a deflationary standpoint can end up actually looking good for things like precious metals. A lot of people think gold only does well in inflationary situations. And if you look at purchasing power, it actually does better during a deflation.
Oh, yeah. Some of the greatest gold runs have been in periods of strong deflation. White metals, obviously not necessarily the case, and I think that's why we see the ratios where they've been. But gold, absolutely. Look at the history there. And, what do you think goes on with the U.S. dollar? I know we're talking foreign currencies, but another little push up here, you think we're turning back down?
Yeah, I think another little push, because on the flip side of that, you go to the next biggest currency, the euro, and I think it's expecting one more small push down. It's at a 50% retracement level or just above. Gold is coming back up to some fib levels that we've been talking about. So, yeah, I think we might have a couple more weeks, another month here of declining euro, increasing US dollar before we see that reversal. Now, the question, of course, what does the reversal do to the markets? Does it benefit the Dow? Does it benefit gold? I mean, obviously it benefits gold, but does it also benefit the Dow? Do we go into one of those markets where equities and commodities are rising at the same time? That's how bad the dollar's gotten.
Buy metals in August.
The last thing we'll mention is to watch the jobs report coming out Friday.
So that should about do it for us. Thanks for listening. This has been Golden Rule Radio. If you like what you heard, click the subscribe button, ring the bell, do the YouTube stuff that you should know how to do by now. Head on over to our website, McAlvany.com, Twitter, @ICA Gold. Like us on Facebook, McAlvany Financial, or give us a call anytime, 1-800-525-9556.